What's going on, guys? Today, we've got a great episode with Polina Pompliano. We talk about the Bitcoin all-time high, how do we get here, and where are we going? We then talk about retail investors pouring capital into the stock market and why they may be smarter than all of the big financial institutions. On top of that, we then get into what's going on with Jerome Powell, the Federal Reserve, interest rate cuts, and whether he's going to be around or not to see the end of his term. That and much more in today's conversation with Polina Pompliano. All right, Polina, what's the first topic?
Okay, so Bitcoin yesterday hit an all-time high of $123,000.
Bang.
This is remarkable. Why did this happen?
Well, there's a lot of things that happen. First of all, Bitcoin is the best asset for someone to put in their portfolio, my personal humble opinion. I think that it will continue to compound for a very long period of time, like I've been saying for a decade. On top of that, Bitcoin is the best barometer for global liquidity. That's my opinion, but also there's data to prove it. Lynn Alden, Sam Callahan did an amazing study that showed it is the most sensitive asset to global liquidity, and global liquidity has been expanding, so Bitcoin's price is going to go up. On top of that, you have an entire generation that says, I want volatility. I don't want all this risk mitigation nonsense. And so when Bitcoin dropped earlier this year in April to about $75,000, the fear index went all the way down to 15. The greed index is back to 70 now. And it's because people are bullish and they realize just buy the dip. All long-term, prolonged bear markets have been outlawed. You ain't going to see that stuff anymore because they got the money printer. And so that is all like structural stuff. We also have an administration. They like Bitcoin. They love Bitcoin. They're being pro-Bitcoin. They're putting policies in place. They're putting the strategic Bitcoin
But you've said
reserve.
before it didn't matter what administration.
Bitcoin is going to be successful regardless of whether the government is for it or against it. It's still going to be successful. So in that regard, it doesn't matter. But if we get our choice, of course we want the government to like it, right? Because it is a tailwind. And so that's what you're seeing happen and play out. On top of that, you have three things that in the short term really drove the price through the previous all-time high of about 110K. First, Bitcoin ETFs. We saw something like $1.2 billion of inflows last Thursday. That was the second highest day of inflows in Bitcoin ETF history. We now have BlackRock's ETF that is about $90 billion.
Well, we'll talk about all of that later.
All right. And collectively, they're $140 billion. But the ETFs, they're very successful. They're rocking and rolling. On top of that, we also saw that at the end of Q2, the expiration of options, for those that don't understand, options are an ability to go long or short. A lot of people are using them to suppress the price and hedge and do things like that. If the options expire at the end of Q2, that downward pressure gets relieved. And so now you've got kind of more buoyancy. You didn't know I knew that word. Kind of like taking a beach ball and holding it under the water. Remove your hands. Up we go. And then if we move up quickly, guess what happens? There's lots of shorts that had piled on. And so those shorts were all sitting there and they were waiting because they thought Bitcoin was just going to trade in this range. Go down to 100K, go back to 110. Go down to 100K, go back to 110. If you trade in the range, when it gets to 110, short, it's going back to 100, right? Wrong. Bunch of liquidations. Bitcoin then gets into something called price discovery. Price discovery is when we try to discover what the new price of Bitcoin is going to be. Last time this happened was in November of 2024. Donald Trump got elected. We went through the 70K, which was a new all-time high, previous all-time high, $69,000. Nice. And from there, we went from 70 to 90. It's about a 28 to 30% move, depending on how you look at the data. If that was to happen now, 110 to about 140. I'm not saying that 140 is going to happen in 2 to 3 weeks, but I am saying that a move from 110 to 120 is a lot of momentum. And so if you continue with that momentum and you have a similar move to what we saw in November, then 140 would be within the kind of realm of possibility. And it could happen much faster than people think. So my whole thing is we are now going up. I expect us to continue going up in the second half of this year because they are printing money, because we are going to get interest rate cuts, because Wall Street now's full undivided attention is on Bitcoin. They realize Bitcoin is a winning strategy. They want to put Bitcoin in their ETFs. They want to put Bitcoin in their public companies. They want to put Bitcoin in their real estate funds. They're going to put Bitcoin in their fixed income funds. They're going to put Bitcoin on their own balance sheets. Anything that they can do where they can take Bitcoin and put it into a traditional product, it is coming. And the second that you go from a contrarian trade to a consensus trade, get ready, buckle up. Bitcoin's going to do its thing. And Bitcoin is up over 100% in the last year. At the same time, Ethereum is down. It's negative. That is called the bifurcation.
I was just going to say that.
Yeah. Bitcoin dominance was down at 38%, I believe, or 33%, something like that. Back in 2022, it's now at 63%. Bitcoin's the king. It's going to remain the king. And I think that now Wall Street realizes there's Bitcoin and there's everything else. Doesn't mean everything else is complete zeros, but
let's talk about
the king is here.
Let's talk about BlackRock. So BlackRock's spot Bitcoin ETF is now the company's most profitable ETF, which is crazy. So as you mentioned, last Thursday, we saw an inflow of $1.2 billion into Bitcoin ETFs. On Monday, the Federal Reserve and U.S. regulators issued a statement saying banks are allowed to custody Bitcoin and crypto. That's big, no? Okay.
That's one of those things that in the day it gets announced, a couple people pay attention. 5 years from now, people will look back and say, "Woo!"
Wait, so why did this? I mean, I feel like it should have been a bigger deal than just a bullet point.
The market is bifurcated in that you've got the hardcore retail Bitcoiners who they believe in self-custody, rightfully so. People should learn self-custody. You should take control of your private keys. At the same time, there's a whole nother class of people. They're not doing self-custody. A lot of them waited for the Bitcoin ETF. Right? They didn't even want to go set up a, Coinbase, Kraken, whatever account. So what now is going to happen is people say, I don't even need to do this at any sort of other organization. I can just buy spot Bitcoin and my bank will hold it for me. Sounds good to me. There's a bunch of people who are going to go do that. Whether people like it or not, this is part of mass adoption. You want people to be able to self-custody.
Yeah.
You want people to be able to use third-party qualified custodians. You want people to be able to buy via ETFs. You want people to be able to buy Bitcoin treasury companies. You want people to be able to buy Bitcoin and hold it at their bank. Let them choose what they want to do. This is all about choice. And so give people the choice to do whatever they want to do and then go educate them. And if we want more people to be doing self-custody, then we must educate them on self-custody. What we shouldn't do is try to use regulation or market forces to prevent people from doing what they want to do with their money. Instead, we should say, hey, you have all these options available to you. Here are the advantages of something like self-custody. But the banks, they're getting in, they're jumping in. They're skinny dipping in the deep end. That's what they're doing. They're so excited that they just stripped off all their clothes. They're jumping deep end. Like when you go to the pool when you're a little kid and your parent tries to get you to go to the shallow end. That's not what their banks are doing. They're not dipping their toes. The banks
but I feel
swan diving right into
But I feel like up until now, the banks were like, no.
Because they
keep
knew
your clothes on.
No, because they... Listen, the banks, you ever seen what's that movie? Is it called The Mask, I think? The guy with the green face and he spins
Jim
around.
Carrey?
Yeah, Jim Carrey, whatever, right? And that's what the banks do. Let's just call a spade a spade. If you're a bank, guess what your game is? Your game is not in having really strong opinions about assets or this. You do what your clients want, right? And you want to grow your business. Well, guess where the clients are going? They're going to Bitcoin. And so if you want young people, if you want new clients, if you want new revenue, if you want new assets, you embrace Bitcoin. Vanguard, let's talk about these.
So Vanguard.
Let's talk about Vanguard.
Vanguard said Bitcoin is not appropriate for long-term investors.
Then Vanguard's not a long-term investor.
But Vanguard has also purchased 20 million shares of MicroStrategy.
Hypocrisy. That's Jim Carrey and The Mask. Who do we want to be today? Right? So when you look at it from that perspective, it just goes back to they're all going to say whatever they want to say. Don't listen to what they're saying. Watch what they're doing. Right? And so you come back to what is Vanguard doing? If they're buying it for themselves, think about the arrogance that you have to be the person who says Bitcoin's not for long-term investors and turn around and be the largest investor in the Bitcoin treasury company. Guess what? Either you're not a long-term investor or you're saying one thing that you don't actually believe. By the way, who cares? They're free to do whatever they want. If you don't like the fact that they're not letting you buy Bitcoin, move your assets. Move with your feet somewhere else. Use your dollars to protest rather than say, oh, I'm going to keep my Vanguard account. I'm going to complain all the time. Like, this is a free market. Move your stuff. Let's go. Make them feel the pain of customers leaving if they're not going to allow people to invest in Bitcoin. Guess what will happen? Other asset managers like BlackRock and others, they're like, hey, we're open for business. You Bitcoiners, you guys are crazy. We love you guys. Why don't you come on over here? Bam. Most profitable fund that they have in the ETF complex. Like overnight, 18 months. In 18 months, they went from we don't have a Bitcoin fund to it's our most profitable fund. Mm-hmm. If you take your business and you plug it into the Bitcoin network in multitude of ways, it is good for your business. And BlackRock is proving it. Guess what? Fidelity, Van Eck, Bitwise, all these other guys, they're doing a fantastic job as well. Their businesses are better because they all created these Bitcoin ETFs. Guess what else is going to happen? Now you're having a bunch of other people show up and say, wait a minute, I should try to figure this out. GameStop, DJT, people are like, oh, those are like kind of one-offs. What are they really doing with this? Whatever. Well, what happens when all of a sudden you start seeing big companies? You think Facebook's going to buy Bitcoin at some point? I bet they will. You think Amazon's going to buy Bitcoin? I bet they will. Now, is it going to be tomorrow? Probably not. Is it going to be in 5 years? I don't know. But what we are watching is we are watching a rise of a new monetary asset, which happens, I don't know, every maybe minimum 50 years, maximum centuries. And we all get a front row seat. Get your popcorn out, kick your feet up, put on your little 3D glasses that they give you at the 3D movie theater and watch the show. Because guess what? Bitcoin is going way higher. And there'll be a lot of volatility between now and then. But if you think that Bitcoin's not going to be measured in millions of dollars at some point in the future, stop. Put down your phone. Just take a deep breath. They're never going to stop printing money. Bitcoin's going higher. And all these companies, they're all going to capitulate. And Vanguard, it's going to be like chef's kiss. When they decide to
they have exposure. I mean,
for themselves.
Right. Okay. Well, retail investors are kind of the backbone of this. Individual investors bought $155.3 billion of single stocks and ETFs in the first half of 2025, marking the largest semi-annual net inflows on record. Retail is dumping their money into Bitcoin and tech stocks. Stand in contrast with Warren Buffett, who's sitting on 5.1% of the entire U.S. Treasury bill market.
Let's break this down for a second. First, let's go after Buffett. This guy, dinosaur. Sorry, love him. Great track record, amazing. Questionable life decisions, but as an investor, great track record. Has not beat the S&P 500, I think, the last 15 years, like collectively. By the way, one of his core principles of his entire investing philosophy: do not own non-productive assets, own companies because companies produce cash flows.
Okay.
Gold, that dumb shiny rock, has outperformed the U.S. stock market over the last 25 years. 25 years ago, if you bought gold and held it, you would now have more money than if you bought the U.S. stock market. So the entire premise of Buffett's life's work has been invalidated because actually we no longer live in a world where you are supposed to go and pick all these individual stocks. It's an intelligence test. If they're going to print money, buy hard assets. If they're not going to print money, then go play your game of all this stuff. But the stock market is being driven by inflation. So is gold. So is Bitcoin. And guess what is happening? Is Bitcoin and gold are kicking the ass of the stock market. And so if you look at Phil Rosen, opening bell, recently had a chart that he put, maybe we could pull it up somewhere. The S&P 500 in Bitcoin terms is down 85% since 2020. You should no longer start to measure assets in dollar terms. Start measuring them in the Bitcoin rate of return. What is the S&P's Bitcoin rate of return since 2020? Negative 85%. So it brings me to retail, self-directed investors, independent investors, whatever you want to call them. They are smarter now than ever before. Mm-hmm. I may even venture to say that retail is smarter than the institutions. Now, it's a little unfair because retail makes up the institutions, which people don't realize. If you go on X, if you go on Reddit, if you go on Substacks, etc., a lot of the people there, they are there in their personal capacity. They're learning, they're directing their own personal accounts, but they also in their professional life work at multi-strat hedge funds, big banks, big financial institutions, etc. So the same people who are learning online or the same people who are inside these organizations now, the younger people. And as the older people move on, those younger people are going to ascend up. And what you're going to find is that there's going to be a convergence. But it's the retail folks' ideas that are now invading these big organizations. And so you can see it. Just look at this year alone. Stocks went down in April. I mean, your boy knew that stocks were coming back. April 3rd, stone cold bottom, basically. I tweeted and said, we're going back to all-time highs before the end of the year. Book it, receipt season. And we did much faster than I thought. But in the recovery, historic recovery, may I add, almost 30% up in 90 days. What we saw was retail was plowing capital, $155 billion into single name stocks and ETFs in the first half of the year. Record. At the same time, the institutions, the hedge funds, the financial organizations, they have much less exposure to the U.S. stock market than historically they would necessarily have, which means that they actually were sitting on the sidelines. They were waiting for it to go lower. They didn't believe in the recovery, etc. Retail understands the most important thing about the financial market. Prolonged bear markets have been outlawed. Dips are for buying. That's what retail has been convinced of. And whether you think they're right or wrong, the data suggests that they are more right than wrong, and they continue to outperform. So it brings us back to the Bitcoin story. Retail was first to Bitcoin. And a lot of the people that I know that are inside of these big financial organizations, they personally bought Bitcoin well before their organizations did. So you can't say, oh, they're so stupid, they don't know what they're doing. What they were doing is they were playing a risk mitigation game. They were playing a bureaucracy game. They were playing a completely different game, but the individuals knew where the value was. And so what we are transitioning to here is a world where the retail investors are going to beat the institutions to a lot of investments. And so paying attention to the retail flows is really important. I think retail right now is like 36 to 38% of the US stock market. I predict that will be more than 50% at some point in the future. And what we are going to watch is that the institutions are going to start following retail, not the other way around. Bitcoin being the first big winner. And I think that there are many, many other stories like that that are coming as well.
Great. Let's talk about your favorite narrative violation. A $27 billion surplus was recorded in June as tariff revenues grew to a record $27.2 billion in June, following a $316 billion deficit in May. Customs duties totaled about $27 billion for the month, up from $23 billion in May. The government last posted a June surplus in 2017 during President Donald Trump's first term, and the fear of inflation never really happened because the U.S. inflation index dropped to 1.66%, according to Trueflation.
Let's come to inflation in a second. First, let's talk about the Treasury surplus in the month of June. Bittersweet. It's kind of like a consolation prize. Today's episode is brought to you by Citizenship. If you're a Bitcoiner thinking about global mobility and securing a true plan B, listen up. Portugal is one of the most attractive golden visa programs in the world, and Citizenship has built the ideal pathway to get you there. They're behind the first Bitcoin ecosystem golden visa fund. It's a private equity fund that purchases Bitcoin via a local company. That gives you exposure to Bitcoin while qualifying you for the golden visa and citizenship in just 5 years. Plus, here's what makes this a no-brainer. Citizenship has the lowest fee structure of any golden visa fund in Portugal. And because their team handles everything in-house, you skip the usual friction and bloated fundraising costs of other funds. So if you're serious about sovereign flexibility, now's the moment to act. Go to citizenship.com/pomp and book a free strategy call with their team. Again, that's citizenship.com/pomp. Go check them out today. Today's episode is brought to you by Polkadot. Polkadot offers secure, scalable, and decentralized blockchain technology that perfectly aligns with the needs of innovative projects. It was developed by Gavin Wood, one of the co-founders of Ethereum and the creator of Solidity. Polkadot aims to build an internet where users have full control over their data and their applications. Polkadot offers tons of unique features, a shared security model, along with the new auction model and significant implementations like ASIC banking. Given these characteristics, it's easy to understand why Polkadot is gaining more and more traction in the cryptocurrency world. Some people even are talking about it as the AWS of Web3. Now, companies such as Mythical Games, Astor Network, and over 50 other independent blockchains with hundreds of applications already leverage Polkadot's technology to power their platforms. If you're looking for a reliable, scalable, and cutting-edge solution, Polkadot seems to be the top choice for industry players. Go check them out today at polkadot.com. I was very excited about the current administration, Doge, tariffs, etc., as a way to balance the budget. I do not believe that we will be able to get to a truly balanced budget over a long period of time. But consolation prize, I believe 2 different months this year, we have had Treasury surpluses, which means that in those months, we collected more than we spent. 2 is better than 0. But I still don't think for the year we're going to get to a balanced budget. I do not think that it is possible regardless. Republican, Democrat, Independent, Mamdani definitely ain't getting there, and neither is anyone else that we put in the White House. It is not possible because of the structure and our unwillingness to actually cut expenses, so we have to print money. But consolation prize, yes, in June we did have a surplus, which shows you that there is a path if we could get our act together and cut enough expenses and drive enough revenue. The tariffs, quote unquote, are working in that regard. Now, with that said, let's go to inflation. As soon as I hear CPI, I shut my ears off. Just stop listening to them. What are you talking about? These people have no clue what the inflation number is based on their methodology. If I have to remind folks, they send people with physical tablets into grocery stores and they say, go find the exact can of soup with low salt, this sodium, blah, blah, whatever, and punch in the price of the soup. And we're going to do that like every 90 days. What? Who in their right mind in today's day and age, with the access to the internet, real-time prices, real-time information, all this stuff, would ever think to design a system to collect data to send humans who are fallible, who make mistakes, with physical tablets into the stores, random stores, and just figure out what the price is? That is crazy town. So that's first of all. Second of all, things like owner equivalent rent is my favorite one. They call people on the phone. They call like 2,000 people or something. And they say, hey, I know you own your home, but what do you think you could rent your home for? Well, if you ask me that, shit, I think I could rent it for $10,000 a square foot. Right? Who's asking? Are you interested? If you'll pay me $10,000 a square foot, I'll rent it tomorrow. Right? Now, obviously, people, they have no clue. So why don't we, instead of doing phone calls, antiquated dinosaur technology, instead go and look? We have websites. I spend too much time on them. Zillow's, Street Easy, Redfin, all these different things. There is a section on these websites that shows you the last closed deals, the last closed rentals. Go and look at actually what things are clearing in the market and measure the rental changes from that real-time data rather than calling people on the phone. And so it comes back to like, why was the polling wrong in November? Same reason why the inflation data is wrong. If you ask people to tell you something, they got no clue. They just lie. They make stuff up. Even if they think they're telling you the truth, they're wrong. So instead, look at the hard data. That's why I like Trueflation more than I like the BLS data. So Trueflation, very interesting story, huge narrative violation, was at 3%. They said inflation was in January. That was higher than the government data. So the government data didn't say it was 3%, but they said it was 3%. So they're not skewed higher or lower generally. They just say what they think it is in real time. At 3% in the middle of January, it crashed all the way down. I think we got as low as like 1.3 or 1.4%. It then rose back up. At the end of June, it was sitting at over 2%, and it's now back down to like 1.8%. So this thing has volatility to it. It's real time. They're showing you what's happening. What it shows is that in the first half of this year, we went from over 3% inflation to 1.8%. Everyone who told you high inflation was coming, wrong. Everyone who told you the shelves are going to be empty, wrong. Everyone who told you all these things you're going to worry about from the tariffs, wrong. But here is the mind bender. I think inflation is going to go up in the second half of this year, but it's not because of the tariffs. The tariffs have been in place now in some cases for 6 months. How long do you want to wait? How long do you think that they're going to wait to raise their prices if they're already have tariff revenue coming in? Obviously, the prices that have been increased have already been increased. And so what you're going to see is you are going to see inflation start to tick up, but it's not because of the tariffs. It's because of the money printing. And so as I've said on From the Desk from Anthony Pompliano, which you guys should all go subscribe to that YouTube channel. Also, I have said this on Twitter a gazillion times, technical number, a gazillion, is Milton Friedman said it best. Inflation can only be created in one place, and that is Washington, D.C. Monetary and fiscal policy determines inflation. If monetary and fiscal policy is not out of tune, then you don't get any issues. Everything's fine. You won't get inflation. But now what we see is that the money supply is starting to grow, not only domestically, but internationally as well. Global M2 money supply is shooting higher. Well, why is Bitcoin going up? Why is gold going up? Why are stocks going up? We hit what I would consider, I used to think of it as the trifecta, but now I think it's the quadfecta, which is gold, Bitcoin, NASDAQ, S&P. Check, 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 check. All four all-time highs. Why? Because the money supply was increasing. And so, yes, inflation is going to come back. It has nothing to do with the tariffs. That is like a smooth brain elementary analysis. If someone tells you that the inflation is tied to the tariffs, instead it is because now they are going to turn on that money printer. And when they do that, yes, it will come back. So the only way that they can prevent it is shut off the money printer, which doesn't look like they're going to do, or grow, grow, grow. And so they're going to try to figure out a way to stimulate so much economic activity that they will be able to grow their way out of the problem, which is nearly impossible, but they're going to be their strategy. And so that tells me that if economic activity increases, guess what else is going to go up? Stocks, Bitcoin, gold. They're all going higher. Just don't be caught holding dollars. And I think that is going to be the story of the next decade. And unfortunately, half of the country, they hold dollars. They do not hold investment assets, and they're going to get crushed. And you're going to see the rise of socialism, communism, all this nonsense in our society because those people feel like they're left behind. But instead, it's all a financial education problem.
Yeah, but those people do have the ability. They're not, boxed out of like the Bitcoin market. Like they're
not boxed out of any market other than private investing where you have to be an accredited investor.
Right.
But any liquid market, they could go sign up for an account. That's part of why Robinhood has been so powerful, right? Public.com, Webull, eToro,
it's crazy
whatever.
It's just like an information.
It is literally, if you said to me right now, could you wave a magic wand and drastically improve the quality of life for billions of people? You get to tell them one thing. That's the thing you tell them. Do not save in a fiat currency. You have to have investment assets. That is it. And if they follow that advice, all of a sudden, the world does not get more expensive around them. It gets cheaper. If you look at in Bitcoin terms, I mean, how many times have I said 2016, average home in America, $280,000. In 2024, average home in America, over $400,000. Everything got way more expensive. How do you keep up? Who got that big of a raise at work? Nobody. But in Bitcoin terms, it went from 664 to 6.
Yeah.
Now, I bet you that the average home in America is probably like 3 Bitcoin. Today's episode is brought to you by ExpressVPN. How did you choose which internet service provider that you use? Well, the sad thing is most of us have very little choice because ISPs operate like monopolies in the regions that they serve. They then use this monopoly power to take advantage of customers. Data caps, bandwidth throttling, the list goes on. But worst of all, ISPs have the ability to keep a log of every single website you visit, and so can a ton of other third parties, unless of course you use ExpressVPN. Look, I thought incognito mode actually meant something until I learned the real hard truth. Your ISP is still watching every move you make online. Your mobile carrier, same thing. And don't even get me started on public Wi-Fi. The person running that network can see everything that you are doing. But ExpressVPN solves this problem by creating an encrypted tunnel for all of your internet traffic, so these third parties see absolutely nothing. Zero, zilch. What makes ExpressVPN stand out from the competition? For starters, it hides your real IP address, which is basically your digital fingerprint that websites and trackers use to follow you around. Beyond that, it's ridiculously easy to use. I'm talking one-click protection that even your grandparents could figure out. Plus, it works on everything. Your iPhone, your MacBook, your Android tablet. You install it once, and you're protected everywhere. The fact that it's the top-rated VPN according to CNET and The Verge just confirms what I already know. I use ExpressVPN whenever I'm on public Wi-Fi or traveling. For me, online privacy isn't optional. Too much of my business happens online to leave it unprotected. Protect your online privacy today by visiting expressvpn.com/pomp. That's expressvpn.com/pomp, and you can get an extra 4 months free. expressvpn.com/pomp. Go check them out today.
You know, it's interesting. I'm working on an article right now about a professional athlete who's investing in a lot of private companies, and also Bitcoin.
Yeah, got a lot of Bitcoin.
And
so-and-so.
Shout out so-and-so. Okay, so-and-so, it's very interesting because when you look at how these like contracts are priced over like 5 or 10 years or whatever, they're in dollars. And those contracts ultimately get devalued. So if you're expecting to make 10 million, you may only make like 5.
Well, you'll still get paid the 10 million. It's just that the purchasing power
the
gets
purchasing power of the, yep.
Russ Okong, pay me in Bitcoin.
He's the first
pioneer. Yeah,
the first professional athlete to get half of his contract or salary, whatever, in Bitcoin. But
technically, the NFL would not let him do it. So he got paid in the dollars that got strike Jack Mahler's. But he tried.
He did it. He
tried. He went to the owner. He said, "Pay me in Bitcoin."
But the whole idea of the fact that, as I was reporting this article, there was a lot of agents to these athletes who, one of them said, "This is very risky and very volatile. Good old American dollars is where it's at." And it's like,
who said that?
Lee Steinberg, super agent.
I know who Lee Steinberg.
Anyway, I didn't know.
Nice
but,
guy. I'm not going to do it, but somebody should dunk on him for that comment online.
Well, I'm including it in my article,
Perfect.
which you all should read. But it's interesting that now there's this like bifurcation. And I think a lot of the athletes are seeing like, I'm putting my body on the line and my purchasing power is getting taken away. What can I do? And even though it looks risky, it's kind of a big opportunity for them.
Well, if you did it with real estate, no one would say it was risky.
Right.
So it's risky. Let's just call a spade a spade. It's risky to the boomers who built their wealth in a world that no longer exists anymore. That's the truth. That's what nobody wants to talk about. That world does not exist anymore. If you hold dollars, savings, you cannot save your way to financial security. It's impossible. So yeah, could your grandparents have done it? Of course. They bought a little house. It was $20K. All of a sudden they turn around, they got $2 million. Like literally, they're out here just punting on real estate and stuff. Great. But for an entire new generation, they say, I can't get ahead.
Mm-hmm.
Bitcoin is one path. There's many other assets that you could participate with, but Bitcoin is one. And I think that is really where you're going to start to see a lot of folks say, wait a second, I need to reevaluate this. And individuals, companies, countries, it's all going to happen.
Crazy. Okay. And let's talk about Jerome Powell. Despite
Who?
the fact, Jerome?
I know
Powell?
who he is.
Why are you making me say it again?
No, I just, it made me think about our daughter recently learned who let the dogs out. She just walks around the house saying, who let the dogs out? Hey, that's my girl right there. I bark every once in a while.
Anthony and our daughter are like
Best friends. Cool.
Okay. Despite the fact that stocks and Bitcoin are up and inflation is down, interest rates remain unchanged. Trump again slammed Powell, saying if he would just lower those rates, if he would lower the rates. And I tried being nice to the guy. It doesn't help. He's like a knucklehead. Oh, he's a knucklehead, a stupid guy.
That's such a boomer, like...
This is so funny.
No, that's such like a boomer, what do they call it? Like insult. Yeah. It's like telling someone, the most offensive thing you could say to a grown man is, you're silly. You're just silly. You're not serious. Come on, you're silly. Right? But like, if you think about knucklehead, that is like what your grandfather says about somebody who like he really, really doesn't like, is he's like, he's a knucklehead.
Do you think Powell will be forced to resign?
Forced. He has the choice. You can't force him to do anything, right? But I don't think that Jerome Powell wants his legacy to be that he got run out of town. So they could put all this pressure on him, whatever.
Why do you think
there's no way to force him out?
Why do you think he's not doing it?
Why is he not quitting?
Cutting rates.
Cut it. Well, that's a whole different story. Look, why was he cutting rates when inflation was higher right before the election? That seems suspicious. At the same time, it didn't work. If his goal was anything on the political side, is he political? I have no clue. I've never talked to Jerome Powell, right? Maybe he is just, hey, look, I thought that was the right thing to do. By the way, Jerome Powell doesn't operate unilaterally, right?
Yeah.
There's the FOMC, there's all this stuff, but Jerome Powell definitely got a lot of decision making there. But I think that if you sat down and people ask him questions all the time, why is he not cutting? It's because he thinks that inflation could come back. But that's also like saying, I'm not going to go outside today because I could get hit by a bus, right? Makes no sense. And so it's like, well, what is your opinion? Do you think inflation is going to come back or not? And let's hold people accountable. That's what's missing in a lot of these kind of bureaucratic positions is take a stance. Do you think it's going to happen or not? Make a decision. If you think inflation is going to come back, then come out and say that. Say, I believe inflation is coming back for XYZ reason, blah, blah, whatever. That's not really what he's saying. Instead, he's like, it could. It's like lawyer language. It's like, it could. It could happen. It could not happen. It may happen. It may not happen. It this, it that. I may not show up to work, whatever. Now, I will tell you, big controversy. Bill Pulte and a lot of these people online, they're putting a lot of pressure on Jerome Powell. And I think they got a pretty good pressure point on. The Federal Reserve building is going through a upgrade, a renovation, some may call it. $2.5 billion. I took 30 seconds. I don't care what the Federal Reserve building, whatever, until I started to read they're putting in like marble floors and stuff.
It's got to look nice. I mean, come
Why?
on.
Why does it need to look nice?
United States of America. You gotta your building's gotta look nice.
No. See, this is a perfect example.
Come on. What message would it send if you didn't have marble floors?
No. Well,
in the Federal Reserve building.
Well, let me ask you this question. Why is it that the Federal Reserve's got marble floors, but they stuck Elon Musk when he was going to cut government spending in a broom closet?
Well, that's because Elon.
No. But this is the point, is like, actually, your environment helps influence your actions. So if we want them not to spend as much money, maybe they shouldn't go to work in super lavish buildings. Make them go to work Amazon style. In the early days of Amazon, they had wood doors that served as their desks. You think there'd be a little bit more cost-cutting approach?
I'm talking about the Federal Reserve, like, message to the world. You have to.
What is the message?
We rich.
But the whole thing is that they're not rich. They're bankrupt. They literally are borrowing money.
It's all about image, baby. Anyway.
All right. Anything else?
No.
You should see Satoshi's palace.
Where is it?
Huh?
What is Satoshi?
I just envisioned Satoshi sitting there. He's like,
God, I would just like really love to know.
Marble floors? He's like, please. Marble floors, those are for peasants.
Who do you think Satoshi is?
$135 billion. 135 big ones.
I need to get to the bottom of this on a Tuesday.
Nah. Whoever eventually figures out who Satoshi is, I hope.
Do you think they'll ever figure it out?
No.
I don't think so.
And I think it's a huge advantage that nobody knows. And I hope
that money never moves.
No, it's not going to move. I don't think it'll move. I hope it's one of two people. It'd be really cool if it was Hal Finney. I think that would be pretty special. Took it to his grave. Or the second thing is, I hope it's like, that's why the Dorian Nakamoto story was so amazing. It was like just some like random dude answered his door. Was like, huh? They take pictures of that man. Huh? Bitcoin? Right? So I think that's the whole thing is, I just hope it's like some unassuming person or whatever. It'd be such a letdown if it was like
the government.
Well, I mean, you said that, not me, but like if it was just, like one of the theories that people have, it'd be so much better if it was like
just like a random person.
Yeah. Who was like,
saved the financial system.
Yeah, I just happened to possibly understand proof of work, cryptography,
kind of crazy,
monetary policy.
Why do you think that it's not Hal Finney?
It could have been.
Oh.
I don't know. He received the first transaction. He was pretty early. He really understood a lot of the technologies. It could have been.
Yeah.
But also, if it's kind of like an experiment, it's a lot of steps to go through to like have a alter ego pseudonym that then you're interacting with. Like you don't even know if it's going to work.
Yeah, that's true.
So I don't know. And look, we'll see.
Kind of
cool. There's this movie called God Bless Bitcoin that Brian Estes and Off the Chain team them all did. Good movie. It's like a documentary kind of. But I think all the time, like, man, God bless Satoshi Nakamoto. And people will say like, oh, all the like people who bought Bitcoin are like, no. Like, forget all that. Satoshi gave the world a solution to probably the single most acute problem facing billions of people. And that solution does not discriminate by age, gender, religion, wealth, education, geography, language, any of that stuff. It simply just says, you can plug your economic value into this system and we got you.
Yeah.
And it's one of the most egalitarian, she didn't think I knew that word either, egalitarian systems in the world, which is like we all work together. It's decentralized. No one's in control.
Very cool.
You work for Bitcoin. I work for Bitcoin. Everyone watching and listening to this, they work for Bitcoin too. And we all get to work together. We never even coordinated. We simply all just had our own personal economic incentive to get to work. That's it for today, guys. Hope you guys enjoy this. Talk to you next time.